Can you hear me? Yeah, okay, great. Sorry, then I don't need this mic. I
Yeah.
can pass this on to you.
I think we're all okay, right? Yeah.
So first of all,
The remnants of DPM.
first of all, thank you all for joining me on this panel, and I'm very much looking forward to asking you questions which transcend the presentation and the research, and also in some sense could either provide a little more color around some of what I described. But before I do that, I'd love for you to just maybe quickly introduce yourselves. I thought I would do that, but then I said I would be reading off your CV, which is not a very nice thing. So maybe something interesting about yourselves as well, beyond what you do. Maybe starting from you.
Oh, great. Pleasure to be here. Thank you to the Endowus team. My name is Chetan Karkhanis. I'm SVP of Digital Strategy and Wealth Management for Asia APAC, responsible for our firm's innovation and commercialization around the digital fintech strategy for Asia. Maybe something interesting about me. You put me on the spot. I wasn't expecting that question. Let me just put it this way. I've been in Singapore for about 5 years, and it's really great to be back in a region which I believe is thriving. And really, gosh, something interesting. I love nasi lemak, so I'm glad to be back.
Oi-Yee, you need to beat that.
Oh no, that's going to be a tough one, nasi lemak. You threw a good one. My name is Oi-Yee. I'm the CEO of ADDX. I was, for many, many years, an investment banker. And maybe the more interesting thing is actually investment bankers are the most technologically unadvanced part of any bank. But decided 4 years ago that I would explore different opportunities. And so the opportunity with ADDX came up, and we can share a bit more about that journey a little bit later. But so I joined ADDX 4 years ago, really to start the commercialization of what is a blockchain-based alternative investment platform. I've been doing that for almost 5 years now, and very exciting the journey, and actually very happy to be contributing to this thought piece by McKinsey.
Thank you, Oi-Yee. Everett?
Hi, my name's Everett. I look after Citi Ventures investments across APAC. I've been with the company for about 1.5 years. I've been in Singapore for 9 years. Had a few stints in other corporate venture capital funds in Singapore. I think what's interesting about me, I'm not an interesting person, but my career has been, as I'm a former investment banker, reformed and recovering still from this to this day. I worked in corporates, I worked in startups, I worked in nonprofit, and I worked in investments. So I think I have a holistic approach to thinking about opportunity in this space. Citi Ventures is more about this. Citi Ventures is a 12-year-old initiative inside of Citigroup corporate franchise, seeking to bring innovation inside of Citi as well as to our clients by investing in category, defining startups that are strategically important and aligned to our franchise globally.
Thank you, Everett. Sam, I guess you must have introduced yourself.
I haven't actually, but
Here's
I
your
don't
chance.
think I
Hey,
need
but
to
you need no
introduce
introduction.
myself. Co-founder, and I have multiple titles at Endowus. I call myself the Chief Intern Officer, so I do everything and anything that is necessary. Fun fact, interesting fact, I guess that I put this panel together, so these are all my friends. But most important thing is that Oi-Yee, when she was sharing that she was moving from investment banking to ADDX, we had a conversation, and I hope that ADDX is appreciative because I had a hand in her leaving and joining ADDX. Yeah,
That is true.
Thank you, Sam. So let me kick this off maybe with Oi-Yee, since you've been a veteran of investment banking with management in some of the largest firms. How do you see the wealth tech space, and how do you see the evolution of wealth tech in the context of the broader wealth management industry?
Yeah, that's a very interesting question. I always take this opportunity to reflect a little bit on my career, my history, what happened. And as I mentioned, I've been in capital markets for about more than 25 years now. And in those days, in the beginning of those days, which was one of the biggest asset classes to be formed within the world, and certainly in Singapore, were the REITs, right? And so in those early days, I was very involved in IPO, structuring, distribution. And I remember in those days, you had to pick up a copy of the prospectus, right? If you're a retail shareholder, you had to take out the form, right at the back of the prospectus, you had to fill it out, piece by piece, right? Your name, your IC, your bank account numbers, and you had to submit that to the branch of the bank. And I'm just sort of, thinking that, and in those days we're like, we have to go and collect all the forms, and then you have to submit, and then, it took days for that to happen, right? And I think we've evolved so much from there. It went from that to ATMs, and of course, right after that, I think was really the Web 2.0 version of finance, which was really banking and banking becoming digital. So wealth tech really has only come about probably in the last decade or so. Partly because the stock market was presumably one of the biggest investments for any of the retail shareholders. But I think over the last 10 years, the opportunities, the asset classes have shifted so dramatically across, funds, fund managers, active managers, passive managers, the stock exchange directly, and then now alternatives, that you're starting to see wealth tech really accelerate in its, in its evolution. I think part of that is also just the observation. I mean, Minister Heng, who was here, I saw Sop, who's going to speak later on, really is about MAS encouraging and developing fintechs in Singapore. And I think wealth tech is a big part of that. And we are just, I think, right at the beginning of that. It took e-commerce, banking about 20 years to really develop. So I think we're probably in our first half of wealth tech development around this part of the world.
Thank you, Oi. And maybe Sam, I could then come to you. Endowus has had an amazing journey in the last 5 years. You've not just built something in Singapore, you've gone to Hong Kong, you've made acquisitions, you've scaled. You're not quite there, but you're well on your way there. Can you tell us a little bit about what have you learned as a part of this journey?
Okay, a lot of things, and we're still learning every day. I think that the wealth tech space is a very unique space, right? Some people throw in like trading platforms like Tiger, Moomoo, or Robinhood, or Futu. Some people even put crypto into the wealth tech space. But for us, I think wealth really is about how we secure the long term, right? Because wealth is a long-term problem and solution. You save money. So people talk about, high-income countries and how, Singapore is a rich country from an income perspective, but that's an annual cash flow thing, right? Wealth is a accumulation thing. So countries accumulate wealth over the long term. And so it's important for us to do the right thing in saving and building wealth, and then investing it really well. So stewarding that is really important. And that's why, we're really focused on the long-term stuff. So no trading, no single stocks or single bonds. We actually have no exchange-listed products because we want to help individuals change behavior in positioning their wealth for the long term. Because short-term volatility normally makes us react in the wrong way. And so what we've built is really technology around solving that core wealth problem of building wealth over the long term, going after the long-term liabilities that individuals have, like retirement and pension, and everything in between. And so I think what we've learned is that, look, what works for us, and this was the vision from the beginning, is to really envision a full-service business. So I think, Joydeep, you shared a lot of developed market examples. So, a lot of those companies I know, I've, invested or I've met the founders in the past. But a lot of the wealth tech space in the US developed was a very narrow space. So they only did ETFs. So they only did, very passive investing. And the value add of that is very little. So Endowus has always envisioned a full-service platform, and as you alluded to, we actually have everything from like short-term cash, money market funds, passive low-cost index funds that we've brought into Singapore, all the way to private equity, multi-strategy hedge funds, institutional quality stuff. And then also, it has to be holistic. So managing your CPF, your SRS, and your cash, all of your source of funds in Singapore is critically important for long-term success. So I think those are some of the things, but the really difficult thing, and I think Oi-Yee should sympathize, is that direct-to-consumer businesses are a very costly business model, especially in wealth. So customer acquisition cost and building scale, as you said, is very difficult, especially here in Asia, because unlike the US, it's not one homogeneous market, it's a fragmented market. Each market requires different regulations, different licensing, different products, different partners to execute your strategy. And so it's a very difficult thing to build scale. So those are some of the learnings that we've had, and I think building a full-service technology-led digital solution that approaches wealth from a holistic perspective, we feel is the right model.
Oh, thank you, Sam. And maybe I go to you, Chetan, next for a different view, right? You're part of a large organization.
Yeah.
You also have a manufacturer lens where you're trying to move to a more customer-centric model, leveraging digital and technology. You're also working with a number of wealth techs, right, to think about your broader ecosystem. So tell us a little bit about how do you see the landscape, and also go back to the question that lady asked earlier about where do you see incumbents and newer wealth tech players, how do you see that game playing out?
Yeah, both are great questions, and thank you for that. By the way, I love the report. I did a quick breeze through this morning, and I think a lot of the rationale for what Franklin Templeton is trying to do as a traditional asset manager kind of aligns with the kind of themes you've mentioned in that report. So I'll explain to you why is a traditional asset manager like Franklin Templeton really in the wealth tech space, and what are we trying to do? Well, if you look 10 years ago, the headlines were all about Google, Facebook, Alphabet, Apple. They're all going to disrupt the asset management and wealth management industry. The traditional incumbents have no place to play. That's really not turned out to be the case. However, technology and digital, and that digital experience, still has a vital role to play in the distribution as well as the servicing of client expectations. We're also dealing with a huge population of digital natives that is soon to be inherit. You look at any report, it could be trillions of assets, dollars of assets over the next 30, 40 years. So how do you actually cater for the future, not just what the clients of today are? And that's exactly what Franklin Templeton is trying to do. And I'll explain three basic pillars of what we're trying to do. One is looking at the digital channel as a source of engagement and distribution. So how do you help B2C players, how do you help B2B players, whether they're incumbents or whether they're next-gen players, with tools, engines, things that can help with personalization and really helping the client get a better outcome. That's why we're all here, to help the end client get a better outcome for their goals, whether it is through personalized goals-based planning or it's through custom indexing. We're actually trying to be a tech player and innovate along the cycle of the tech life cycle itself. The second place is, I think Oi-Yee will appreciate this, in the field of tokenization and alternatives, we have to be able to offer clients a better and more accessible way of reaching. You're really dealing with a product that's 80 years old. Think about it. 40 Act came out in 1940. It's an 85-year-old product at this point. Think about the ways you can actually disrupt that using blockchain, not Bitcoin, but blockchain as a fundamental technology. And we've actually already done this in the US with our Benji token, which operates on the Stellar and Polygon Polygon chains. And watch this space for more. I mean, we're approaching the Singapore FinTech Festival, so we'll soon have announcements there as well. And the third bit of it is, again, technology related, but what is a core asset that investment managers have? It's people. It's human minds and it's people. But there's lots of technology out there around AI, data analytics, machine learning that can be leveraged at the core processes of what we're trying to deliver as value. So I think if you just dissect it according to those three main pillars, a traditional asset manager, and I think we're among good company of other peers who are trying to do the same, but we need to continue innovating so that we're not seen as dinosaurs, 20, 30, 40 years out from here.
Oh, thank you, Chetan. That's really insightful. Maybe I'll move to the investor lens. And Everett, you saw me describing the fall in available investor money towards fintech, considerable fall in that. How do you see, what's your outlook? Also, how do you look at wealth tech players in the context of time horizon for investment given profitability? How do you think about the category itself relative to the others? It'd be great to hear your thoughts on some of this.
Yeah, so we look at ourselves as being a strategic investor and a bit more a patient outlook on how the markets develop. And so the way we invest is to really with the client service orientation. So we're a bank, a Citigroup, among other things, and banks have a intimate relationship with wealth, as large amounts of retail wealth are stored in banks, and so it's important to deliver on client expectations and provide elevated customer satisfaction across the board. And so we want to invest in companies that can provide our clients improved access, higher levels of choice, and elevated user experience as well. And so we're investing in for that long-term outcome with higher share of wealth with Citigroup. So in terms of the funding outlook, we believe that venture investment will still happen in the wealth tech space. We're always looking out for, and we always have been looking out for category-defining participants in solutions that have durable business models, large target addressable markets, and believable moats, like realistic moats that provide them competitive differentiation and competitive advantage. Platforms-oriented approach is a typical investment thesis for venture capital because that provides exponential outcome. And we still believe that exists in the wealth tech space, and we'll continue to find great startups that are doing that worldwide, but definitely in APAC.
Okay, thank you, Everett. Maybe one question to Oi before I throw open questions to the audience. I'm very curious as you look at your model and how do you kind of support issuers, right? As you think about their investor base to find funds, how do you create that platform? What is your own approach to that?
Yeah, that's an interesting one because today fundraising is a very challenging market, right? So we do see a lot of projects come to speak to us to expand distribution. The first thing I would say is it's not like digitizing it or tokenizing it. It's not like putting lipstick on a pig, right? I mean, I can't make a terrible investment sell just because it's tokenized. So I think the first thing my team has learned is to really be quite critical about that, what that project is, or whether it's a fund or a company or a project financing. But actually, more importantly, which actually we spend more of our time, is what is the right investment. And we did not in this journey expect markets to be COVID, and then it was good, and then it was bad, and it's sort of. And actually, we also realized over time that the right project is the different, sort of different folks for different strokes for different folks. Today we see, in 2021, private equity was very popular. In 2023, actually, private credit is very popular, right? So I think having the platform actually then adjust to those choices became quite important to us, and that helps us, and that's helped by really we capture the data. Obviously, we have large enough number of investors on our platform. We then sort of see the trends changing, right? Because we always try to have a shelf of different types of products across the different risk curves. We start to see patterns, right? We start to see people, investing more and more in a certain type of product. And then we're like, okay, how do we double click on that? Because it feels like the risk appetite has changed for this type of investor. I think over time, as we get bigger and more of that, I think we'll be able to be better at that. And then we can help issuers be more specific. Right, we can be much more targeted with, hey, we should be looking at, for example, corporates who have enterprise financing needs. Today is a good place to do short-term paper on platforms because investors are looking for short-term returns with the yield. So with that, we can better and be more precise with the type of demand, the size of the demand, and therefore be much more accurate when we work with issuers, whether they're large investors or small investors. We also do a lot of marketing webinars, so we do get a lot of soft feedback as well. And I think that's something that complements what is the hard data. And with that, we actually try and anticipate or predict what might be shifts in trends. I mean, for example, next year, how do we even approach 2024, right? And hopefully but I think what's quite good with us is we have a very powerful relationship network with number of GPs and corporates. And so partnering them and finding the right time and the right opportunity to issue has, I think, worked relatively well for us.
Thank you, Oi. And we have a few minutes left, so I have some questions from the audience. So maybe the first one I target to you, Sam, because you're the only one who can answer this.
Okay.
Which is, how does a firm like Endowus remain successful in this highly concentrated space, and how does it remain competitive?
Yeah, great question. I think it's related to how maybe Endowus is differentiated in providing the services that we provide to our clients. And I think we had prepared some questions, and one of the questions that was given to me was, how are we different from the traditional platforms like banks or iFast, Fund Supermart, or because we touch multiple different segments of the market. And I think the first one is that, look, traditional channels have been much more product-focused or product-led, whereas what we're trying to achieve is an advice-led kind of solution and service. So we focus on the client and what their needs are, what their views are, what their goal is, rather than focus on a singular fund that we're trying to push, right, which is very product-led. The second thing is that I think that, technology enables a lot of things. So we can embed financial literacy education. We can directly answer questions from our client base on the app. Literally every month we have like CIO questions, Ask Sam kind of questions, and we embed it into the app experience. Our team does a fantastic job with that. So we can embed advice, education into the experience of the client. And the most important thing is that what we focus on, as we say, is advice, access, and cost. The three important pillars of success in wealth. And so I touched on advice, but access is critically important. And that's, I guess Oi-Yee also is in that space as well of providing and democratizing access. And so that's really important, right? How can we get higher yielding money market funds that give you 5.5%? How can we get the lowest cost passive index fund into Singapore? We have that at 5 basis points, cheaper than any fund that existed in Singapore. Like, how do we get the best-in-class private equity or multi-strategy funds into the hands of individuals at lower minimums? Previously, private banks would make you put in 5 million. You can buy it for 100,000 in Endowus, at the lowest cost. So, and the final piece is cost, right? So it's critically important because every beeps, every 10 basis points, 1% that you save on cost is directly improving your returns without taking any additional risk. So reducing cost at every layer is critically important. So we really focus on advice, access, and cost. And in every area, I think we remain competitive versus what other incumbent service providers provide. And that's why I think we've been able to succeed in scaling the business this way. Yeah.
Thank you. Thank you for sharing that, Sam. I have one more question, which I think a few more questions, but this one maybe I'll pass to you, Chetan. And the question is that if you think about adoption of wealth tech in private banks, asset management companies, wealth management companies, how do you assess the current rate of adoption among the different incumbents?
That's a great question. And I'll set it historically, just my background. I've been in the industry for about 25 years, 20 years in the US, 5 in Asia, although I lived in Indonesia in my childhood. So it's good to be back, like I said. Look, I think where Asia stands today across D2C, B2B to B2B2C or B2B to IFAs, for instance, I think there's generally, we're about 5 to 10 years behind the rate of adoption, maybe even more depending on which country you're in. Singapore and Hong Kong probably not as far behind. Places like India, China, Indonesia, quite far behind, at least 20 years. I'll give you a simple example, anecdotally. When I was a Schwab customer, I still am, 25 years later, they didn't have internal rate of return, they didn't have gain loss, they didn't have any sort of portfolio analytics or next best action. Okay? The difference between the US market and Asia is the disintermediation of the advisory market. And I think I may have, yep, okay, I'm back. is a disintermediation of the advisory market. And in the US, you have 300,000 advisors, half of which are independent RIAs. In Asia, we all know about 80 to 90% is all intermediated, which gives folks like Endowus a brilliant opportunity to disrupt. But the challenge is, I think the rate of adoption within the banks, the incumbents, within the independent platforms is still far behind from both an access as well as the analytical tools that they use today. Simple things like, for example, one of the things we have been focused on is a goals optimization engine using dynamic programming. It's quite popular in the US. Here we get pushback because I don't think both the investors nor the intermediaries are quite there yet in terms of understanding how dynamic personalization should work and could work. Places like India, which is a huge market right now, you're still operating where the US was about 20 years ago. It's about product pushing. It's about transactional. You know, the average holding period in the Indian market is about 1 to 2 years for 80% of the trades that go through. That's because of the lack of investor awareness, but also the lack of the intermediary awareness to guide clients to better outcomes and manage them through better portfolio analytics, better portfolio tools. So I see the glass as half, well, optimistically, I'm optimistic. So where I do see is tremendous opportunity in Asia to adopt these portfolio analytical tools, to come up the cycle so that we're going from version 1.0 to version 2.0 over the next 5 to 10 years. And that's across D2C platforms as well as B2B platforms. And I didn't completely answer a question before, but I think the reason, in Asia, incumbents need to recognize that their regulatory protection is only going to last for so long. Disruption will happen as a natural consequence of the trends that investors seek, and more I see it, at least if you use Singapore as a microcosm, digitally savvy natives are going to adopt things that give them access to better information and better outcomes. So I'll leave it at that, but I do think there's a lot of opportunity ahead.
And you do see a lot of disruption ahead, therefore.
I'm still hopeful, yes.
Could I opine on that too?
Yeah, absolutely.
Is that the investor and the advisor experience with wealth and investing is typically at the user interface level. And there's a suite of technologies in the back end that we just don't see as individuals, that some are provided by incumbents and some are provided by fintechs. And we look at infrastructure being a very important enabler for not just regulatory, but execution, for product selection and access and other services. So there's a lot of things that happen behind the scenes that are very provocative that help bring the whole digital experience and transformation forward.
Maybe stay with that, then maybe I'll ask you, actually any of you can answer this question, or at least we'll have a point of view on this question, which is any thoughts why platforms like MoneyOwl and Grab have discontinued the financial and investment offerings?
Oh, sensitive topic. Anybody
I can
offer?
go ahead.
Everett,
go ahead,
you see the most
This is kind of a controversial question to ask on the stage, but
Chetan's willing.
So I think that it's every startup and every proposition, whether it's a new initiative or a legacy one, has to find product market fit and continues to deliver on client expectations and have a sustainable model for the future. I mean, I can't comment on what happened with anyone else, but when I advise anyone looking at starting a business or starting a feature or launching a feature or a new product line, it's think about the end customer and how you can continue to deliver on those expectations, meet and exceed and deliver something magical and delightful to your customers, and they'll continue to come back to you.
Chetan, you were going to say something.
Much along those same lines, Everett, so I completely comply. I agree. I think one other point is saturation. I think if you're not very clear on the value proposition, and I think Endowus has laid out a very clear value proposition, access, advice, and fees, costs, right? You have to win across all three. If you're not winning, then in a market like Singapore, given this population size, the saturation effects can happen much quicker than in a market like the US, where you have hundreds of these. They're still existing, but it's just going to take longer to scale up. So it's just a difference of saturation point.
No, thank you.
Yeah.
I think we are exactly on time. So firstly, I wanted to thank each of you your really insightful thoughts and for sharing quite openly both easy as well as slightly difficult questions. So thank you very much.
And as a host, can I say one word? Because I think, you know, I think it was a few years ago during COVID, Joydeep and Vishal and the McKinsey team published a report on the wealth management industry and technology, wealth tech. And Greg and I both read it and we thought it was very insightful. And that was one of the reasons why we engaged Joydeep and Vishal and Serena and the McKinsey team this year to, you know, work on this Asia Pacific wealth tech report together. And they've been amazing partners and exceptional, and really excited to have you join us as a knowledge partner this year.
No, thank you. Thank you very much. It was our pleasure. I would say that.
And please download the report and read it. Yeah. Fantastic.
But I think, you know, the three words which I think advise, access and cost. I mean, that's it, right? That's all we need to take away. So thank you.
Thank you.